So, good day everyone. I'm Ethan, moderator for this webinar. Welcome everyone for today's webinar, Payroll Deduction Do's and Don'ts. I would now like to introduce our presenter for today, Mark Schwartz. Mark Schwartz is an employment tax specialist and has over 15 years of employment tax experience as an independent consultant and as a payroll tax auditor with the state of California. I would now like to hand over the floor to the speaker. Over to you, Mark.
Thank you, Ethan. Welcome everybody to today's audio conference on payroll deduction do's and don'ts. Hopefully, and the design of this particular webinar is to leave you with the knowledge about the various types of deductions, some of which are legal and some of which aren't, particularly when it comes to the area of garnishments. All right, so our agenda for today, we'll talk about two types of deductions, pre-tax versus post-tax, right? There are also another distinction, mandatory versus voluntary. Business deductions and the FLSA, okay? There's crossover here into business income tax deductions. So then we'll go into common mistakes that employers make in the deduction arena. Then we'll go on to our section on wage garnishments and accounts payable levies. These are mandatory deductions. We'll talk about penalties you can face for non-compliance, and then a brief section on state-by-state rules. So pre-tax deductions, okay, right? And, as the name implies, they're taken from an employee's paycheck before taxes are withheld. In other words, they decrease taxable income. And again, post-tax deductions, right, are deductions after mandatory and voluntary pre-tax deductions have been taken from gross pay. So in other words, FICA, FIT, SIT, they are pre-tax deductions, of course. Mandatory. Now we'll go into mandatory versus voluntary. So FICA, this is just stuff you're probably already familiar with. We won't dwell in a long time, but this is the current FICA. So state and local taxes, right? Not just the federal taxes we worry about in each and every state. Okay, so FIT we're all familiar with, right? Other mandatory deductions include wage garnishments. So voluntary deductions, right? They're attractive and most people are wise to take advantage of it if your company offers it. Retirement, right? Again, 401k, it's voluntary. It's just wise that most employees do so. There are other types of plans, 403bs, which is similar to 401ks, 457, okay, which is deferred compensation, and there are others in the 400 series. They all have their certain set of rules and maximums. Health savings accounts are another, right? Job-related expenses. And this is where you want to make sure you do not run afoul of Fair Labor Standards Act protections, mainly in regards to minimum wage. So the general rule on business expense deductions. Now we're in that, speaking of uniform tools and equipment. This is the federal law on the matter. The federal law says employers may deduct the cost of a uniform, right? If they have to wear a particular uniform that they're not going to wear on the street, it's for your business only. So you can deduct that cost as long as the wages after the deduction don't fall below the minimum wage. When you take a look at case law that gets employers in trouble, it is that practice. Deductions for lodging and meals. Under federal law, there's an exception to the general rule that paycheck deductions cannot bring an employee's pay below minimum wage. Deductions for paying back a debt. So now our section on common mistakes that are against FLSA rules. Employer improperly requires tipped employees to pay for customers who walk out without paying their bills or for incorrectly totaled bills. Some common payroll deductions made by employers that are unlawful. Bears a business-related expense on your behalf, you are legally obligated to reimburse them for that. So let's see, based on our rules of thumb here, with payroll overpayment, right? Kind of similar to what we were talking about. Can my employer deduct anything from my paycheck if I come to work late? So Title III of the Consumer Credit Protection Act, administered by the Wage and Hour Division, it protects employees against certain actions due to wage garnishments. Lump sum payments have their own rules. The central question is whether the employer paid the amount in question for the employee's services. If the lump sum payment was for services, it's like any other wages. All right, in terms of wage garnishment, earnings are more than just the hourly or monthly salary that you pay a worker. Current federal minimum wage is $7.25. So garnishment protocols I like to suggest. Open garnishment orders immediately. Don't let them sit in an inbox. For multiple garnishments, total withholding cannot exceed Title III requirements, so employers have to follow priority guidelines. All right, some simple numerical examples if you need them about what would be withheld. And remember, garnishments are by pay period, not by week, like overtime is. More numerical examples. Penalties apply to all withholding rules. You violate them, you're going to be subject to penalties. So a URL is right there for state by state rules. So that takes us to the end of the slide presentation.
Thank you everyone for participating. Thank you, Mark, for the wonderful webinar. And you all may disconnect now. You all have a great day ahead. Bye-bye. Take care.